The next part is the effective entry and exit. And what happened is when you get into a stock, most of the people don't know when to get out or when to get in and how to establish a stop loss. We won't cover it at length in this DVD, but at least enough that you have an understanding and that you're able to follow the newsletter. Using that same type of pullback that we just explained, 1, 2, 3, 4, 5, 6, 7, 8. I give you this example. Then right here we have the day where we have a higher high. And what happened is, as we get into this, we use the low of this day as the stop loss. Okay, and then from that point on, if the stock goes under this, because it could happen that the first day that the stock goes up like this, it fails, come back. So you would basically from here you would have like a red bar because it would open right here and then come back down. It would be red, and then it break this this low. I'm out. I'm not even waiting to see what's happening because the stock wanted to go higher, and then some people just see it and they start selling massively into it or whatever, and they push the price down. So that's not a good sign, and you need to get out. And you enter like this, you've got a very tight stop loss. So whatever you're willing to risk, you can make a few times, and that's a good risk-reward ratio that you try to get on this. So you see 1, 2, 3, 4, 5, 6, 7, 8 days, and right here it's kind of pausing, but we'll see if it continue further up. So at the same way, actually another way that we can enter into a stock is by drawing a trend line and seeing when it break. And if you look at the previous slide, it's pretty much the same place, and it's like that most of the time because many people use different things to get into a stock or get out actually. But these are key trend line used by very good traders, and they look at it, and when there's a change in trend, that's when people come in and they come with size. So you want to be there when that happens. Just to show you this trend up, as you see this, if I trade very short term, right? So I can take a position for a few days, 4, 5, 6 days, sometimes in the same day. But if you look at this right here, I just wanted to show you that as you have an uptrend, you also get a sign with the first time you have some red color in this sequence. You need to understand that something is about to change. The pressure is getting different. So you have a lower low right here. So you had this low. You never broke it basically for a long time. If we go back 1, 2, 3, 4, 5, 6, 7 days where the low was always higher than the previous low. And you look for higher highs or a break of the trend of lower highs when you look at a pullback. But when you look at a rally up, the first phase up like this, you're looking at the first day that the higher low sequence gets broken. So this is the first day where it's broken. So we cross under this blue bar, and basically you've got 1, 2, 3, 4, 5, 6, 7 days of pulling back. It's a few dollars from this point. Some aggressive trader like me, as soon as I see this, I'll sell half of my position as soon as I see some red color. I'll basically take some of this stock position. So let's look at the same. If we put all the pieces together, you can see a lot of red right here, right? And look at this: 1, 2, 3, 4, 5, 6, 7 days where you have a lower high, and then this day, after a big drop down, you had like this first move, and then you had right at the moving average of the 10-day, you had like a failure where you could have gone up, but you need to look at the market at the same time and other things. When everything is in sync, that's much more powerful. And if around this period in March, that's when the market bottomed. So when you have this happening with the new higher high and a good volume as it happened on this day, you basically get a good shot of having a good profitable trade. And that's what happened on this move. Okay, then that's basically, I just wrote that how many days down, but when you start, it's just that series here, that pattern is like what, 6-7 days we talked about earlier, I think. Yeah. So then we go to the moving average.